Hello, everybody. Welcome to sunny Hollywood, Florida. I'm Bob Pisani at the Inside ETF Conference. I've been coming here for nearly a decade. 2,500 of the top investment professionals in the United States trying to figure out what the hot investing trends are for 2018 and where this enormous and growing exchange-traded fund, or ETF, business is going. Joined here by Dan Draper, the head of Invesco Powershares, one of the big ETF providers that's out there, and it's a beautiful day here. It's a little bit windy, but it's 70 degrees. I think we're all happy to be out here.
Great to be with you.
Thank you, Dan. It just keeps growing. $480 billion in inflows for the exchange-traded fund business, a new record last year. 3.2, 3.3 assets under management growing. Do you see anything that's going to slow down this juggernaut?
No, not at the moment. I think you're seeing structural as well as kind of cyclical change. I think structurally, you're continuing to see in the early days where holders of individual stocks and bonds moved into ETFs for diversifying, but now actually we're starting to see go mainstream. ETFs sitting alongside active mutual funds, creating larger solutions for investors.
I know you say it's sitting along active mutual funds, but it seems to me like money is flowing out of mutual funds into ETFs, out of high cost anything into lower cost anything, but particularly into lower cost exchange traded funds. You can get the average ETF now, I think, is 30 basis points.
That's right.
That's a remarkable number, and you can get some S&P 500 funds for 3 or 4 basis funds. That's what, $3 per 10,000?
That's right.
It's a remarkably amazing investment, cheap investment for a very broad product that you can get. Where does this fee wars end? This has been great news for the average investor, buying broad products for low cost, but it's got to be straining all of the big funds here with this enormous cost-cutting measures.
It is. Well, I think if you look at the ETF themselves, you're right. I mean, the fees as low as 3 basis points or $3 per 10,000 out there. But I think if you look at the bigger ecosystem where additional costs will come out, will be on setting portfolios and looking at the robo space, but looking at as you put together portfolios of ETFs, the cost coming there. So look, this is a win-win. An ETF is a new technology, and I think benefiting like in retail and other sectors, the end consumer is going to benefit. They're going to have cheaper access to better solutions.
Let me just go on to active versus passive, because the active guys got very, let's just say, a little nasty last year, saying this passive is not a good idea. Has passive investing gotten too big? Index investing gotten too big?
Look, I think at Invesco, we strongly believe that active and passive, it's not an or. Putting these together for the clients. And I think if you look, there were net inflows into active mutual funds that were priced at a reasonable level. So the active area is going to continue to grow, particularly in fixed income, Bob. I think if you look now with the 10-year, 265 and maybe heading to 3%, active fixed income or smart beta fixed income in ETFs is an area where I think active management is going to really be able to perform
I think the problem we've all had with active management is most active managers never outperform their benchmark. Yes, there were a few superstars year in and year out, but we've known this for 25 years, and that's one of the reasons your competitor like Vanguard came into being for indexing. So I see the trend towards indexing as very logical for the average investor. And I think the low cost is nothing but a win-win for them. Let me move on to some hot investing trends right now. Your competitor, Larry Fink, from BlackRock, sent a letter to corporate America last week saying corporations should be more socially responsible. Do you think corporations should be more socially responsible?
Well, I think if you look in terms of companies being purposeful, this is something that comes up regardless of the demographics, millennials, baby boomers, but companies that not only deliver great returns to shareholders, but also think about employees. They think about broader stakeholder bases, and I think that theme is going to really continue to move forward as we think about giving. At Invesco, we focus on the purpose of giving better outcomes to individuals, and that can be definitely our clients, but also it can be employees and other stakeholders. So I think that call to action and thinking about stakeholder value, I think it is important.
Yeah, on the surface, who's not in favor of corporations being more socially responsible?
That's right.
Like, is anybody going to say, no, I'm not in favor of that at all? So it makes sense. But when you look at people actually putting the money where their mouth is, ESG funds,
yes,
environmental, social, governance funds, they've been around for a while. We've talked about it. And yet the inflows into them have been very, very modest. They talk about millennials loving ESG issues. And yet, why aren't people putting more money into these funds?
Right. Well, outside the U.S., you are seeing demand grow for ESG. Europe, Asia. But in the U.S., you're right, it's very nascent. Quite openly, the millennials, they do like ESG. They don't have a lot of money yet. So that's why we're not seeing. But I do think over time, the focus, again, the purposeful work, the stakeholder focus, that being able to build better companies, and I think being able to have more diversity in many ways through the company is going to be increasingly important. It's going to come, but it's going to take a longer time horizon here.
I have to ask you about Bitcoin. I haven't seen this kind of, I don't know if you want to call it a mania, but the level of retail interest is just off of the charts. The SEC has basically said no to a Bitcoin ETF. They haven't said no, but they put the barrier to entry so high, I think you would agree, that it's going to be tough to come to market. Let me just ask you, do you think it is possible for a Bitcoin to satisfy the SEC's concerns, or if not, is there some other way that Bitcoin type ETF type products could come?
Well, Bob, I can't speculate on what the SEC would or wouldn't do, but I think you've obviously seen that existing filings have been asked to be pulled back. I do think it is interesting. It definitely has the .com flavor. I think clearly we're watching very closely the futures contracts, which have recently launched on CME and CBOE, just to kind of gauge who are the buyers. Are these products providing the type of trading that's necessary? But I think we have to sit back and watch, be engaged. But I think for the moment it is something that feels frothy. But at the same time, you can see this idea of trying to have something that does evolve like maybe gold. Does it evolve as a currency? So many different angles it could take in different formats. But for the moment, I think it's going to be difficult to have a product that will get to the end consumer in the current environment. Yeah,
perhaps an exchange traded note. I don't even know if that could be approved at this point. There's a lot of speculation. We'll be having some more guests on in the next several hours to talk about the Bitcoin phenomenon. But for the moment, we're going to have to leave it there. Dan Draper, good to talk to you as always. And we are here live for the next 2 days at the Inside ETF Conference, Hollywood, Florida. Everybody have a healthy and happy trading day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.